Ladies and gentlemen, good day and welcome to the earnings conference call of Everest Kanto Cylinder Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Everest Kanto Cylinders Q4 and FY'24 earnings conference call. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. We will initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now request Mr. Puneet Khurana to make his opening remarks.
Thanks, Anup. Thanks. Good evening, everyone, and thank you for joining us, our earnings conference call. I will initiate the call by taking you through the operational and financial performance, after which we'll open the forum to have a Q&A session. We have reported stable operational and financial performance in FY'24, with a healthy uptake in sale volume witnessed during the year. While our Q4 revenue increased year-on-year and remained stable, on Q&Q basis, we experienced a notable impact on gross and EBITDA margins due to low realization and higher costs. In Q4 FY'24, consolidated revenue reached rupees 325.8 crores, EBITDA stood at 30.8 crores, and PAT at rupees 13.1 crores. Meanwhile, standalone Q4 FY'24 revenue stood at 217 crores, year-on-year increase of 20%, with EBITDA at rupees 19.6 crores and PAT at rupees 8.4 crores. For FY'24, standalone revenue reached 771 crores, with EBITDA of rupees 90 crores and PAT stood at 53.9 crores. Our consolidated basis revenue stood at 1,223 crores, with EBITDA at rupees 160.5 crores and PAT at rupees 97.6 crores, up by 28.6% year-on-year. Revenue from CNG segment contributed 51%, followed by industrial business at 28.6% and jumbo sales at 15.7% in FY'24. Our capacity utilization have improved to around 60% in Q4 FY'24, led by higher volumes. With our performance in Q4 was impacted, we remain optimistic about the long-term perspective of seamless gas cylinders in India. The government's commitment onto eco-fuel natural gas utilization, coupled with fiscal incentives and infrastructure development, should continue to create a conducive environment for growth of CNG vehicles. The increasing number of CNG stations should further fuel the uptake of CNG vehicles. Additionally, the government plans to expand green hydrogen application across transportation, industry and energy storage sector, coupled with growth demand in hydrogen-related infrastructure, should help EKC use its expertise and gain market presence in the growing hydrogen market. We continue to see healthy adoption of CNG vehicles in both passenger and commercial segment. In PV segment, where we are currently have limited presence, we are actively working to add marquee customers in the upcoming fiscal. Meanwhile, the commercial vehicle segment is experiencing an uptake, as a trend is expected to continue with substantial capacity and a strong balance sheet. We believe we are in well position to capitalize the growth opportunity in the industry. On that note, I come to an end to my opening remarks and would request the moderator to open the forum for any questions that they may have. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking my question, sir. And sir, my first question is regarding what has been the volume growth for us during this quarter? And can you compare Q1Q as well as YOY, please?
You give the percentages, no? Just be here. Just give me the percentage. So volume is about 18% growth overall for the year.
Okay. So, sir, what has been, you said that there has been drop in the realization. So, how sharply the realization has dropped and what is the reason behind it? Is there any market share, pressure from the competitors, or what is the reason? Can you throw some light on that?
So, it's a year-end, so, we've taken some provisions also. So that has been one of the reasons for the drop in the margins. And also the product mix. Some of the product mix was also the drop in, margins. So competition is not really the major reason for the drop in the margins.
Okay, because there has been drop in the realization is across the business. In domestic, it is quite evident, even in the international business.
International business, yeah.
Okay. Sir, there has been sharp increase in the other operating expenses, also in the power and fuel cost.
You got 3 crores of CSR. So again, like I said, there were some provisions that were taken. That's the reason you see, you feel that the expenses, the power and fuel expenses are, not in ratio, but otherwise they are in ratio.
Okay. Can you throw some light of what kind of provision, some indication in that regard?
So, for example, there was the entire CSR was taken in the last quarter. It was around 3.5 crore rupees of CSR was taken around that time.
Okay. What was the amount you said? 3.5 crores.
Yeah. Was taken at the end. In the quarter, in the quarter, last year in quarter.
Okay. Sir, but in terms of the drag in the top line is quite high. So, if you consider the overall growth in the production numbers of PV/CV is upwards of 15% on Q-on-Q basis, our volume has also in line with that Q-on-Q number of the industry. So, what can be the reason that has dragged the realization so much?
So, like I said, the product mix, CNG is still coming back. It has not fully, the business is not fully back. The CV business is slowly getting, showing some uptrend. So, we'll definitely see the things improve as going forward.
Sir, there has been a good rise in the inventory levels also. It's quite high, 200 crores vis-a-vis, 125 odd crores earlier. So, whereas our sales have remained on similar levels. So, what is the reason behind it?
Inventory because Dubai we could not. So I think this is in UAE. We had a delay in the pickup of the product. It was which was supposed to be delivered because of the Egypt market. There are some foreign exchange regulations that came in at the last minute that we couldn't dispatch the product, and we had a huge inventory that got left over, which is obviously going to move. But this is one of the reasons why we saw the realizations fall in the UAE.
Okay. So that is the reason why there has been sharp drop. In fact, UAE Q&Q has almost has halved compared to last quarter.
Yeah, because of the product was ready to leave, but there are lots of delays and because of the Egypt, there is a lot of issues on foreign exchange, so we didn't get the LCs to dispatch the product.
So, sir, going forward, are you seeing this issue to be resolved now?
Yeah, it will get resolved, but this is just it's just temporary. It will get resolved for sure. Yeah. I mean, we have been dispatching product in the past. It's only that there was a delay in the in the pickup, so we didn't get the LCs on time, so the product got stuck in Dubai. But it'll definitely move. It will move out.
So how are you seeing Q1 progressing in that regard, sir?
It's already moved out, the product.
Okay. So UAE will become now steady scale of around 50%?
It should. Yes.
From this quarter?
Yeah.
And sir, there has been sharp increase in the USA business. So on a steady state, what number should we consider, sir, in USA?
USA business.
The business, will continue in manner. And this quarter was a little exceptional.
So this quarter is exceptional, but we can consider it to see some good optic because it has a good order book.
Okay. Thank you so much, sir. I'll call back in the queue and.
Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Kushal Chopra from RV Investments. Please go ahead.
Firstly, I want to thank you for the opportunity. Sir, as I'm sitting for the first time in your earning conference call, I would just want to have a background of the company. I can notice that in 2022, the sales and the EBITDA margins of the company was robust. So, can I have an insight about why and what has caused the company's financials to degrade in a lower side after 2022?
So, what happened in 22, the CNG prices, CNG is, one of the big major product of the company.
Okay.
So, CNG, compressed natural gas prices on the station were at 40 rupees.
Okay.
In 22. In 23, those prices moved from 40 rupees to 80 rupees.
Okay.
So this actually caught the whole industry. That's why the whole industry was, our CV business, which was growing quite fast. OEMs were making CNGs, at about 60% of the production, suddenly came down to 10 to 12% because of the sharp price increase of, CNG.
Okay. Got that, sir. That has caused the volumes of CNG.
Yes. That's why the 22 was, I won't say exceptional year, but, we were expecting that the things will keep going, the business, the prices of CNG will remain stable, but, the global situation with the war in Russia and other things, this suddenly changed, and, the scenario changed quite fast.
Of course.
So the potential in the business does exist, so people are getting used to accepting that CNG prices will remain in this 80 range or may come down to 75, and so the customer has accepted to buy the product and has, the sale continues, and nowadays there's a genuine offtake of the product, and we are seeing a consolidated monthly basis, so it's showing that CNG can stand on its own. It doesn't really need the support of the price alone. So it's a sustainable business model, CNG, even at a price which is quite high.
Okay, got that. So, as you said that the CNG prices currently are lurking around 80 rupees odd levels. So
70, 75, I don't know. It all depends. CNG prices at different places are at different rates. Yeah.
Of course. So what is the outlook of the industry from here on? Because if we see the diesel and petrol prices,
give you a perspective of the price. It's difficult to give you a perspective of the price of what CNG prices will look like maybe next year or something. But all I can tell you is that even under these circumstances, there is a customer need for CNG vehicles. There is a customer who are ready to buy CNG vehicles even at these prices.
Actually, if we see, sir, there is a competitive advantage for the electric vehicle. So the operational expenses in running an electric vehicle is less. So are we expecting a very strong and stern competition from the electric vehicle segments in the country, and provided that the government push is very significant in this sector?
Yeah. So EV business is a completely different market. So CNG will have its own market, and EV is going to take a lot of there's a lot of infrastructure development that needs to be done. So CNG infrastructure is being developed parallelly. Plus EV vehicles are more expensive. So customer is finding it still having a CNG vehicle still a bit of advantage of flexibility of of course EV it's got its advantages and disadvantages of running the vehicle when you want to run the vehicle. So some places CNG does still have advantage over electric vehicles.
So, sir, amongst the products that we offer, what is the segment share of the CNG cylinders?
Sorry,
what is the share of in terms of volumes, the share of CNG cylinders?
For our company?
Yeah.
So that'd be around 50%.
So the half of the chunk of the business comes from CNG.
Exactly.
Okay, sir. Thank you very much.
Thank you.
Thank you. The next question is from the line of Reed Jain from First Water. Please go ahead.
Yeah, thank you for the opportunity. In your presentation, you have mentioned that EKC has supplied buffer vessel to ADNOC. So I just wanted to understand how big the opportunity could be for the buffer vessel product.
So, this is something that is project-based orders. So these, whenever these kind of projects come, so it is not something that, is on a regular basis.
Okay. But what kind of orders we can expect, like minimum orders every year?
It's very difficult, because these are projects, so you just complete one project and then you just wait, for some other project to come at certain times. So this is very difficult to put in some kind of a clear idea on these projects.
Okay. And since you have got this order, any margins for this order?
No, definitely the margins are there. This is in Dubai, no? Yeah, definitely, the margins are good, and this is going to, start some, because when the more and more hydrogen stations come up, so definitely this business will become more and more lucrative.
Okay. And sir, in Nigeria, there is some residential CNG initiative. So how EKC is taking benefit of that initiative? Are we supplying in that country?
Yeah, of course. See, Nigeria also now CNG is taking off. So definitely, when it takes off, we'll definitely be supplying cylinders there.
But at the same time, are we facing any competition in global market from Chinese players? Because
competition is already there. Competition is already there in the global market.
Yeah, but how intense is the competition? Are the Chinese players offering the lower cost than EKC?
See, Chinese will offer low price, but our quality, our customer, reach and other things is definitely we have some product advantage.
Okay. So just to get an idea, suppose for the same product of EKC and Chinese player, what could be the cost difference? in terms of percentage?
I think Chinese maybe 10-12% lower.
Okay. Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Hi, am I audible?
Yeah, we can hear you.
Thank you very much for the opportunity. Sir, I'm just seeking some clarifications with respect to your opening remarks, where you mentioned that there were some cost increases and there were pressures on realization. So one of the costs you pointed out was CSR, which I understand. That's an year-end thing. And obviously, I guess because of the delay in shipment, there would be operating deleverage. Other than that, were there any other costs which you would like to point out, which were out of control this quarter? And also on the realization side, can you be a bit more specific about what was the extent of the realization drop?
Sorry, what did you say? The realization?
So you mentioned that there was pressure on realization and there were some cost increases which happened during the quarter. So one of the cost increases was the CSR thing. I understand that.
There is no cost increase as such.
All right.
Of course, the product mix did affect the realization.
Right.
And of course, some provisions that we talked about, that affected the realizations.
Right.
Yeah.
But if I pick up your entire product portfolio and I look at individual SKUs and individual items there, like for like, how much has the price dropped by? Or there is no price and it's completely mixed?
Very difficult to answer that, but there might be something here. We'll have to.
Generally, the prices of the market are a little lower than the norm.
No, the prices in the market are generally lower than normal.
Okay.
Yeah, but I don't have, because the product mix is there, it's very difficult to determine which was the one affecting the realization.
So would it be fair for us to have this understanding that the mix part may resolve itself over a period of time, perhaps next quarter, but whatever pressure there is some pressure on realization?
Yes.
And has that continued into Q1, sir?
Things have improved now.
Things have improved now. Okay, great, sir. So for next year, can you give some idea as to what kind of volume growth you are expecting across various geographies?
About 10-15%.
Great, sir. Thank you very much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, what is your revenue and margin guidance for FY'25 and FY'26?
So around 10-15%.
Revenue growth.
Yeah.
And margin?
Yeah, in double digit, yeah.
Double. Okay. So by when can we reach, scale of about 2,000 crores revenues? When do you see that happening?
No, we definitely are working on that. Let's see, how our plans will come through.
Okay. And like in longer run, what will be our sustainable margin?
Sorry?
In longer run, for the next, say, 3, 4, 5 or more years, what will be the sustainable margin in this business?
Sustainable margin. Do we have a number on that? Currently, quite sustainable. With the current margins, we are quite sustainable. So sustainability is, I think these current margins we can sustain, no problem.
But can we do say 15%? That will be better. Is that sustainable? 15%?
No, of course it is sustainable. It all depends on the product mix. It depends on lots of things.
Because I understand, because of gas prices and your mix, currently we are at sort of a lower in the cycle. So, like, I was trying to understand whether we can sustain a 15%.
Definitely. Yeah, we are working towards that. Let's see.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
So you mentioned that 50% of our volumes is in CNG segment.
Yeah.
So does this 50% mean we are supplying this to the commercial vehicle segment, or is there some other usage also, the CNG?
So this is going for your CNG, for gas transportation also, for passenger cars, for commercial vehicles.
Can you give a breakup of this between passenger cars, CVs, and?
It's very difficult to do that. Very difficult to give a breakup.
But how much of this would be going to vehicles, maybe passenger or commercial, both?
I'll have to come back to you on this. I don't have it offhand.
All right, sir. That's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Chirag Jain from Yogya Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, I had two questions. What is our market share in the CNG segment currently?
Yeah. I think around 50%.
Around 50%. Not in revenues of the industry.
Yeah, it should be around 50%.
Okay, that's also 50%. So secondly, to clarify, do we have the approval in place due to which, for the Dubai business, that due to which our Q4 revenue was stopped?
So approval for, sorry, what?
You mentioned about approval
hold up on the dispatch, so that is all done now.
Still, we have not received. What was the amount for that?
What is the amount? Around 1 million grams.
Okay, understood. So by how long do we expect it to become?
Sorry, say that again, please.
By when do we expect it to be? Do we expect it to receive the approval?
Yeah, we already got it. The approval is already done.
Okay.
It is not an approval. It was more like the LC. It was not an approval issue.
Okay.
It was more like the foreign exchange issue that is going on in Egypt.
Okay. Got it. Thanks. I'll call back in a bit.
Thank you.
Thank you. The next question is from the line of Chetan Palke from Alpha Investco. Please go ahead.
Yeah. Good afternoon, and thank you for the opportunity, sir. Sir, recently Bajaj Auto, they have announced that they will be launching some CNG two-wheelers, and I think with a tank capacity of around 5 kilos in 5 liters, and in some interviews it is even going up to 11 liters. So are we having a product portfolio which can cater to potential?
Yeah. So we are supplying to them.
In India?
Yeah.
Okay.
Yeah.
Mm-hmm. So we will be the sole suppliers to Bajaj as we speak?
Right now, the program is just starting, so it's very early. It's too early to decide. Right now, we have made some supplies, but it's a new development really. So what the market will be and how will it come out, then we'll only know maybe in the next 6 months.
Okay. And usually, sir, realizations tend to be higher for smaller cylinders, or how is it? I mean, broadly speaking, if you can just help us understand how we should estimate the realization profile, whether it is moving up or down accordingly.
I don't have the number right now with me, because the product mix is so large.
Mm-hmm.
So, yeah.
But in general, sir, I mean, if the
it's very difficult to, it's difficult to make a general observation. I mean, general this thing, because our product mix keeps changing so much. So sometimes it's just difficult to put in exact determination where the margins are more higher.
Okay. And sir, my second question is, now that the year end is complete, what kind of feelers or communication that is coming in from the OEMs for the upcoming year? How are their production schedules looking like? Or
so the schedules have improved. Schedules have improved considerably, than last year for sure.
Okay. So what kind of volume growth we can expect from the industry and from EKC?
At least 10-15% volume growth should be there.
Okay. Sure. And we expect to retain or improve our market share.
Yeah. Of course, we have to. Yeah.
Okay. And sir, how is this? What is the pricing difference between the composite cylinders and our products as we speak?
So the Type 1, say, composite will be at least, I think, maybe 3 times more expensive. Yeah.
So that gap is not narrowing. That pricing gap is still there.
No.
Okay. All right, sir. That's it from my end. Thank you and all the best.
Thank you. The next question is from the line of Ankur Poddar from Swan Investments. Please go ahead.
Good evening, sir, and thank you for the opportunity.
Mr. Poddar, I'm sorry to interrupt. Your audio is not clear, sir.
Sir, audible now?
Sir, it's distant. We can't hear you clearly.
Now is it audible?
Yes, this is much better. Please continue.
Yeah. So, sir, just wanted to check firstly on the UAE thing. Now, there were 2 things that you indicated in the call, that the increase in the overall inventory of 200 crores was largely due to the order that got pulled up during the last quarter, and we dispatched the same. So, is it fair to assume that by end of Q1, the inventory will reduce by almost 80 odd crores that the shipment has been done?
Raw material. I think. One second. Hello. Yeah, this is Sanjeev here. So the inventory includes your RM, WIP and FG. So obviously, we say, when we talked about the earlier question, it was regarding your ready-made finished good on the finished product. So finished product, we are saying that it has been dispatched, what was there lying. And on a continuous basis, there will be production, there will be finish. So the cycle continues.
True, sir. But the finished good inventory you amounted to the tune of 80 odd crores, right?
Yeah.
So definitely, if that got booked out of the book, then the inventory should reduce to substantial amount in the Q1.
The full amount will not be
building up a still inventory at our end.
That's what I'm saying. Okay, every time there will be some inventory which will lie. So whatever was held up has been dispatched.
Okay. And in terms of our raw materials, sir, how are we hedging ourselves? Because if you look, definitely quarter on quarter and year on year also, we have seen an increase in the overall raw material cost. And because of a decline in the overall realization, our gross margin also come down. So how are we hedged in terms of the raw material cost?
On the raw material front, we get better pricing because we buy in bulk. So on the other side, on the hedging of the currency, yeah, we do hedging at times.
So for all our entire order book that we have in our hand, our raw material is hedged, right?
No, hedged from what point? Are you talking of currency or are you talking of
From the volume perspective. So currency is open, definitely. I know we can't do it much, but from the volume perspective.
No, we obviously have adequate stocks and adequate orders in place.
So in terms of the 200 crores, the inventory that we have, what will be the component of the raw materials in it?
I'll have to get back to you on this. I don't have this, kept this separately.
Yeah. And so secondly, now definitely we will see a turnaround in the UAE business with the incremental 80 crores coming in. Do we foresee any such delay in the LC in the coming odd quarters, or the business is running as usual in the UAE?
See, on the currency part, since, it's like the conditions in Egypt are a little different and there's a war going on in Gaza, and so obviously, there are some elements which we think may come up further, but it all depends. If that thing improves, we may not face any situation.
So, okay, so we are not seeing any major challenges.
Yeah, we are, because it started moving again.
Okay, so that's good to hear. And in terms of the USA, definitely see, if you look on the sequential numbers, we have definitely seen a sharp improvement in the USA, which you indicated a strong order book and the strong inquiry. So can you help us understand what is the current order book and the executable time period that we need to execute that order?
So we have a large order book, and the executed time period is around 18 months, the max.
But
So they are long drawn orders because we get it from large government organizations like your Army, Navy, NASA, and others.
So sir, is that in terms of a tonnage or in terms of the absolute number, can you be able to quantify it?
I can quantify only in terms of value, because numbers and all, I mean, we don't have that details here. But
so that will be appreciated if you can help us understand the value.
I will get back to you on this.
And sir, on the Indian front and the initial remark, you indicated that because of the product mix change, our realization has dropped down substantially. So can you help us understand which segment of our product went through in this fiscal or last quarter, which has led to a sharp deterioration in the overall margin?
No, generally, it's general. You can't really specify it's gone wrong. Basically, it's on a general basis, yeah.
No, but sir, at the one end we are changing because there's a change in the product mix which has helped, because of which the realization has dropped down substantially, and that has taken the entire benefit of the volume growth. So I just wanted to understand in which segment of our business or the product got hit so badly that the benefit of the volume growth has been wiped out.
I think more so, we can have this discussion with you separately. I mean, we'll let you know.
Oh, okay, sir. And one more question, sir. Definitely, see, now realization is not in our hand. Probably you will come back to us in terms of the order book in USA. So, other than the gross margin, below the gross margin, just wanted to understand what are the levers as a company that we have in our hand to improve the operating efficiency, and what are we doing there?
So on the operating efficiency, obviously we have control on the price of the purchase cost of the product, and the operational efficiency of running the plant. These are the two factors which we work on, and saving costs wherever we could do.
So that's only to understand what are the levers, or where are we probably putting our extra effort to save our costs? Because if you look last quarter also, our power cost has gone up substantially. Other expenses you indicated because of a 3.5 crore CSR provision. But other than that, CSR, in terms of power, in terms of the consumption of stores and spares, trade,
all these areas are monitored, and we are working towards bringing in more efficiency. So obviously you'll be able to see this in our future quarters.
Okay. Sure, sir. Thank you. That's all from my side. All the best.
Thank you. The next question is from the line of Rishabh Gang, from an individual investor. Please go ahead.
Hello, sir. Thank you for the opportunity. So, last quarter you have mentioned margin guidance of 14 to 16%, and right now we have mentioned a double digit. So, first of all, wanted to understand what do you mean by double digit? Mid-teen, low-teen, high-teen? Also, what would lead to an increase from a 9% to, let's say, a 15%, right? From where the EBITDA margin will increase, whether it will be from the revenue line item or the cost line item or product mix?
It will be all a combination of every element which you indicated. It will be on the cost basis, on the sales pricing, and then on the cost savings, and everything will work towards it.
I would like to know some specific cost line items where you see margin expansion happening, right? Where will the operating leverage come into play?
No, more so on, see, we are talking of lower realization. When we say lower realization, obviously, we have to ensure that we sell a product at appropriate margins. So, we are working towards that.
Okay. Also, you mentioned about the product mix moving unfavorable. Wanted to understand whether it is happening because of our internal reason or because of market forces. And also, market forces, right? Okay, fine. So, which product, how much variance is there in the gross margin level across different product category, right? Wanted to know on that.
So, normally, CNG is a better marketing product for better margin.
So, if you see your product-wise breakup, FY'23, 48% was in CNG. Now it is 51%. So how is the CNG changed in quarter 3 and quarter 4 of this year?
Quarter 3, quarter 4 is improved from the earlier quarters. And between quarter 3 and quarter 4, there has also been slight improvement.
So when you're saying slight improvement in CNG, then the product mix is actually better, right? Rather than like how?
So this is given of the whole year. The figures which you are reading is of the whole year.
Yeah, that I understand. So what was the product mix for quarter 3 and quarter 4 for CNG?
Quarter 3, quarter 4 was similar. I mean, we are. It may be like a percentage or two up or down.
Okay, fine. Also, you have been telling about the hydrogen opportunity, right? That compressed hydrogen can be transported in gas cylinders. Wanted to understand what is the opportunity size for you as a manufacturer, and in terms of the volume and the target addressable market for you, and how much do you think that the revenue contribution will be in the going forward years?
So hydrogen will probably in the future will turn out the similar kind of opportunity like it has in CNG.
Okay.
Yeah. So it's too initial right now to because we don't have any hydrogen stations in India now, and so this whole opportunity will take some time to come. So there's a lot of today we are still focused on CNG and EV market. So hydrogen is probably something that's going to take some time to come.
Okay. No. So let's say by which year do you actually think that some hydrogen related cylinders you will be making? Also, do you already have the cap?
The market is the market will take some time to come. It will not this year. Maybe it may take 2-3 years before hydrogen small starts will happen. But in a big way, it will take some time.
All right. Assuming 3-4 years, fine. Do you the capacity that you already have for CNG industrial and all, can that capacity be used for making cylinders for hydrogen, or you will have to make a different capex?
No. This capacity can be used to make hydrogen.
So without any incremental capex, you can use it for hydrogen cylinders?
Yeah, maybe some minimum capex you can do it.
Okay, but would appreciate some more clarity on product mix from next quarter. Maybe you can because you're saying product mix is leading to a lower realization, but could not understand.
No. We'll definitely work on that and come back to you with probably a little bit more details.
Okay, and your EBITDA margin guidance is around 15%, right?
Yeah.
All right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking my question again, sir. Sir, can you throw some light on our Egypt capacity expansion, and where are we in terms of what is the status? When is the plant expected to commission? Yeah.
The Egypt plant, as of now, construction is going on, and we believe that it will be concluded by March 31st or thereabout, and hopefully the following year we'll be able to sort of have sales in that region.
March 31st, 2025.
Right.
Okay. So have we started? When are we expected to start? Booking some revenues for Egypt, and in fact also in terms of cost?
The first quarter of 25-26.
Okay. So Q4 FY'25 will be, there will be cost loaded for the Egypt plant?
No, it will be a capital cost. It's not a cost for revenue. It will be a capital cost.
Okay.
Yeah.
That's all from my side, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rishabh Gang, an individual investor. Please go ahead.
Yes, sir. Forgot to ask one question. So the product categories are this only, right? CNG, industrial, jumbo, and trading sales?
Yes.
So what are the SKUs that you have in each product categories, right? I want to understand whether it is a very complex business under each category. Can you tell a bit about the SKUs next?
So of course, the SKUs are quite large. In each segment, there are quite a lot of products.
Oh, okay. You see, lot means it can mean anything. Can you give some numbers, like how many SKUs that you actually have in each category?
Maybe about 150.
150 SKUs across each category, or
No, combine all three categories.
150 SKUs. All right. Thank you so much, sir.
Thank you.
Thank you. Participants, you may press star and one to ask questions. Ladies and gentlemen, I will now hand the conference over to the management for their closing remarks. Over to you, sir.
Thank you once again for your interest and support. Should you need any further clarification or would you like to know more about the company, please feel free to contact our investor relation team. Thank you.
Thank you, members of the management. On behalf of Everest Kanto Cylinder Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.